The Great Debt Jubilee. What if we just erased all debt? Imagine waking up tomorrow and every debt on Earth has vanished. Your mortgage? Gone. Student loans? Erased. Credit card debt? Disappeared. The $35 trillion US national debt? It never existed. Your first thought, that sounds amazing. Your second thought, if you're paying attention, wait, who just lost $300 trillion? Because here's the thing about debt that most people forget. Every dollar of debt is also a dollar of wealth. Someone's liability is always someone else's asset. Today, we're running the most radical economic thought experiment possible. What if we actually did it? What if, tomorrow, every government, every bank, every person agreed to cancel all debt everywhere? Would it create paradise? Economic collapse? Or something far stranger that nobody's considered? Let's find out what happens when you press the reset button on the entire global financial system. Before we blow it all up, let's understand what we're dealing with. Total global debt in 2024, approximately $307 trillion. That breaks down into household debt, $59 trillion, mortgages, credit cards, auto loans, student loans. Corporate debt, $88 trillion, business loans, corporate bonds. Government debt, $92 trillion, national debts worldwide. Financial sector debt, $68 trillion, bank loans to each other, derivatives. Here's the critical insight most people miss. That $307 trillion isn't owed to aliens. It's owed to us, to pension funds, to banks, to your grandma's retirement account, to life insurance policies, to foreign governments holding US Treasury bonds. Think of it this way. When you have a mortgage, you owe the bank $300,000. That's your debt. But on the bank's balance sheet, your mortgage is an asset worth $300,000. They expect you to pay it back with interest. If we canceled your mortgage, two things happen simultaneously. You gain $300,000 in wealth, no more debt. The bank loses $300,000 in assets. Their money just vanished. Now multiply that by 8 billion people and every institution on Earth. This is why debt cancellation isn't a magic solution. It's a zero-sum transfer of wealth. The question isn't should we cancel debt. The question is who wins and who loses when we do. Let's say it happens. A global agreement. At midnight GMT, all debt is cancelled. What happens in the first 24 hours? Hour 1. The banking system collapses. Banks are dead instantly. Not struggling, dead. Why? Because banks don't work the way most people think. They don't have vaults full of cash matching every deposit. They operate on fractional reserve banking. Here's how it works normally. You deposit $1,000. The bank keeps $100, 10% reserve requirement. They loan out $900 to someone else. That person deposits it in another bank. That bank loans out $810. Through this process, your original $1,000 creates $10,000 in the money.
Supply through debt. After debt cancellation, all those loans, gone. All that created money, vanished. Bank's assets, wiped out. Your deposit, wait, does it still exist? The paradox. Your bank deposit is actually the bank's debt to you. If we're canceling all debt, technically your savings account just got canceled too. Within hours, ATMs don't work. Banks have no assets to dispense. Credit cards are declined. The credit system is frozen. Online banking shows $0 across all accounts. International transactions halt. Correspondent banking relies on debt. Hour 6. Pensions and retirement funds evaporate. Your parents' retirement? It just became worthless. Why? Pension funds and 401ks invest primarily in government bonds, 35 to 40%. Canceled. Corporate bonds, 20 to 25%. Cannot. Mortgages and other debt instruments, 15 to 20%. Canceled. Real numbers, U.S. retirement assets, $38 trillion. Estimated 60% held in debt instruments. That's $23 trillion in retirement savings that just vanished. Millions of retirees who were receiving $3,000 a month from pensions, they're now receiving $0. Hour 12. The currency crisis begins. Modern money is mostly debt-based. When you take out a loan, new money is created. When debt is canceled, that money should theoretically disappear. The monetary paradox. If debt-created money vanishes, massive deflation, economic freeze. If it stays in circulation, who owns it? The former debtor? Chaos. Central banks face an impossible choice. Print new money to replace what vanished? Hyperinflation risk. Let the money supply collapse? Economic death spiral. Try to recreate the old system? Then what was the point? Hour 24. Society begins to fragment. Winners celebrate. Losers panic. But here's what's strange. The winners aren't who you think. Young people with massive student loans? Yes, they win. Homeowners with mortgages? Yes, they win. Heavily indebted poor countries? Yes, they win. But the losers? Retirees, pensions gone. Savers, bank accounts questionable. Anyone who lent money and expected it back. Insurance companies, their investments wiped out. Countries that held U.S. Treasury bonds, China loses $1 trillion instantly. Social fabric starts tearing. The responsible saver who spent 40 years building $500,000 in bonds just lost everything. Their neighbor who maxed out credit cards and has a free house is now wealthier. How does that feel? As the dust settles, new patterns emerge, some expected, some bizarre. The housing market paradox. Everyone who had a mortgage now owns their home free and clear. Amazing, right? But wait, property values collapse immediately. Why? Because nobody can get a mortgage anymore. Without mortgages, only people with cash can buy homes. That's maybe 10% of buyers. Demand craters, prices follow. Actual scenario, your $500,000 home with a $400,000 mortgage, debt cancellation, you own it outright. Market value drops to $150,000. You gained $400,000 in debt relief. You lost $350,000 in equity. Net result, you're $50,000 better off. But your home is now nearly worthless as an asset because there's no functioning mortgage market to create buyers. The corporate apocalypse. Corporations worldwide have $88 trillion in debt. Canceling it sounds great for them. Free money. Reality? Airlines. Their planes were bought with loans, now free, but their credit cards don't work to buy fuel. Retailers. No suppliers will ship goods. No credit equals no 30-day payment terms. Tech.
Companies. Bonds that funded R&D are canceled, but so are customer credit facilities. Everyone. No working capital loans equals can't pay employees equals mass layoffs. Within a week, 40 to 60% of corporations in bankruptcy. Different from debt, these are operational failures. Supply chains completely frozen. Unemployment skyrockets to 30 to 40%. The barter economy emerges. Without functioning banks or credit, people adapt. Week 1 developments. Local communities create alternative currencies, cigarettes, gold, even printed IOUs. Barter networks spring up. I'll fix your car if you give me food. Crime spikes. If the system doesn't work, why follow rules? Black markets thrive. The only functioning economy. Historical precedent. This happened in Russia in the 1990s after Soviet collapse. By 1992, 60% of transactions were barter. Industrial giants traded locomotives for chickens. As reality sinks in, political chaos erupts. The creditor-nation rebellion. Countries that lent money are furious. China's perspective. held $1+ trillion in U.S. Treasury bonds, lent $200+ billion to Belt and Road countries. All gone. Response? The West destroyed the global financial system. This is economic warfare. Japan's perspective. Biggest foreign holder of U.S. debt, $1.1 trillion. Meticulous savers, now robbed. Social contract destroyed. Work hard, save, get nothing. Saudi Arabia and oil producers. Petrodollar system dead. U.S. bonds they held, worthless. Response? No more oil sales in dollars. Maybe no oil sales, period. The debtor nation celebration, then crisis. Poor countries initially celebrate. Argentina, we're free from IMF debt. Zambia, Chinese loans are gone. Lebanon, we survived the debt crisis. Then, reality. No country will ever lend to them again. Can't import food, medicine, or fuel without cash up front. Infrastructure projects halt. No credit for construction. Within weeks, humanitarian crises emerge. Example, Pakistan. Canceled $130 billion in external debt. Also lost all lines of credit for imports. Can't buy oil, food, or medicine. Blackouts, fuel shortages, famine threats within days. The domestic political wars. Inside every country, different groups face different realities. The United States. Winners. Millennials and Gen Z. Student debt gone. Underwater homeowners. States like California with high debt. Losers. Retirees. Social Security's trust fund was invested in government bonds. Savers. States like Texas with low debt. They were responsible. Now they're not rewarded. Political polarization explodes. Young versus old, debtors versus savers, irresponsible versus responsible. Protests and potential civil unrest. Retirees whose pensions vanished versus young people celebrating debt freedom. The government legitimacy crisis. Governments face existential questions. If government debt is canceled, what happens to Social Security, funded by bonds, Medicare, funded by bonds, military salaries,
Paid from borrowed money. Infrastructure built with bonds. The nightmare scenario? Governments try to continue services, but no way to borrow money. Who would lend after the Great Cancellation? Must raise taxes immediately by 40 to 50% to cover lost bond financing. Tax revolt? Probable. Government legitimacy? Questioned. Historical parallel. Weimar Germany canceled war debts after World War I. The government lost legitimacy. We know what happened next. Assuming society doesn't completely collapse, what economic system emerges? The death of fractional reserve banking. The old banking model is dead. What replaces it? Option 1. Full reserve banking. Banks can only lend money they actually have. Your deposit stays in the vault. Lending drops by 90%. Economic growth crawls. Interest rates skyrocket. 15 to 20% on any loans. Option 2. Government-owned banks. Only option when private banks are dead. State becomes the only lender. Centrally planned economy by default. Inefficiency and corruption likely. Option 3. Cryptocurrency and decentralized finance. Bitcoin and crypto suddenly look attractive. No central authority can cancel debt. But volatile, unproven at scale, deflationary. Could work, but painful transition. Real scenario? Probably a chaotic mix of all three, varying by region. The end of credit as we know it. Before debt cancellation. Want a car? Get a loan. Want a house? Get a mortgage. Want to start a business? Get credit. After debt cancellation. Want a car? Save for 5 to 10 years or buy used. Want a house? Save for 30 to 40 years or never. Want to start a business? Use your own savings. Most can't. Economic impact.
Consumer spending drops 40 to 60%. Business formation drops 70 to 80%. Economic growth becomes nearly impossible. We're back to 19th century economics, the wealth redistribution. Who actually ends up wealthier after 1 year? Big winners, people with large debts and few assets, students, underwater homeowners. Young people, less to lose, more to gain. Countries with high debt to GDP ratios, they shed the most. Big losers, retirees and elderly, lost pensions and bonds. Savers, lost bond and bank holdings. Creditor nations, China, Japan, Germany. Responsible people who avoided debt. The perverse outcome, responsibility was punished, recklessness was rewarded. The productivity collapse. Without credit, productivity craters. Farmers can't get loans for seeds, equipment, or seasonal costs. Plant less, harvest less. Food prices triple. Manufacturing can't finance inventory or equipment. Production drops 60 to 70%. Mass unemployment. Services, cash-only economy, maybe 50% of previous size. Formal economy shrinks drastically. Real estimate, global GDP drops 50 to 70% in the first year. We're talking about a depression that makes the 1930s look mild. Next up, let's project 5 to 10 years into this new world. The return of feudalism? In a world without credit, wealth concentrates in those who have cash and
Hard assets. New aristocracy. People who owned property outright before cancellation. Gold holders. Owners of productive assets, farms, factories. They become the new lenders, at their terms. New peasantry. Former debtors, yes, the initial winners, can't access credit anymore, must work for cash. Aristocracy. Essentially wage slaves. Historical parallel, the medieval economy. Why did feudalism exist? No credit system. If you needed to plant crops but had no seeds, you went to the Lord. He provided seeds, you gave him half your harvest, forever. The geopolitical realignment. The global order completely restructures. The dollar dies. US dollar was backed by faith in US debt. US debt no longer exists. Why would anyone use dollars? Reserve currency status. Gone. China's strategic victory. Lost $1 trillion in bonds. But gained no debt constraints. Can manufacture and export without dollar system yuan or gold-backed currency becomes dominant. The new global split. The cash alliance. Countries with resources, low debt, strong fundamentals. Maybe China. Oil producers. Russia. The chaos zone. Former developed nations trying to rebuild. US, Europe. The collapsed states. Poor countries that can't function without credit. The innovation desert. Here's something rarely discussed. Almost all innovation is funded by debt. Silicon Valley, built on venture capital, which is based on borrowed money and future returns. Pharmaceuticals, companies borrow billions for R&D over decades. Green energy requires massive upfront capital via credit. After debt cancellation, no venture capital, no long-term R&D funding, no major infrastructure projects. Innovation stops. Result, technological progress freezes. We're stuck with 2024 technology for decades. The social trust collapse. Perhaps the most underestimated consequence. Why would anyone ever lend again? If debt can be cancelled, lending becomes pure risk with no upside. Social implications? Can't borrow from friends/family. Trust destroyed. Can't have business partnerships based on credit. Can't have governments that promise future benefits. Society becomes radically present-oriented. Cultural shift. From invest now, gain later to consume now. Nothing is guaranteed.
Short-term thinking dominates. Long-term planning becomes impossible. After all this chaos, let's address the core question. Why doesn't this sound appealing anymore? The debt paradox. Debt is simultaneously a burden on debtors, an asset for creditors, a mechanism for economic growth, a tool for inequality, a promise between parties, a foundation of civilization. Here's what most cancel all debt advocates miss. Debt isn't primarily about the rich exploiting the poor. It's about time-shifting consumption. You want a house now, but can't pay now. Debt lets you live in it for 30 years while paying. Economic coordination. Businesses need working capital. Credit makes supply chains work. Intergenerational transfer. Society invests in infrastructure now, future generations pay for it. Fair, since they use it. Risk management. Debt allows someone to take risk, entrepreneur, while someone else provides stability, lender. The thought experiment reveals canceling all debt doesn't create equality or prosperity. It creates economic collapse, social fragmentation, innovation cessation, concentration of wealth in hard assets, return to primitive economic systems. The real problem isn't debt itself, it's debt structure. Predatory lending should be reformed. Unsustainable leverage should be regulated. Inequality of access should be addressed. Lack of forgiveness mechanisms should be improved. What would actually help? Instead of canceling all debt, targeted relief. Cancel predatory/impossible debts only. Better bankruptcy
Laws. Make fresh starts easier. Debt-to-income regulations. Prevent excessive leverage. Progressive restructuring. Forgive more for those who truly can't pay. Public banking options. Compete with predatory private lenders. So, what would happen if we canceled all debt globally? Short answer, civilization as we know it would end. Not exaggerating. Our entire economic system, social structure, and technological progress depend on the ability to make promises about the future, which is what debt is. The uncomfortable reality. We ran this thought experiment and discovered that debt, despite its problems, serves crucial functions. Enables economic growth. Allows time-shifting of consumption. Funds innovation and infrastructure. Creates incentives for saving and investing. Binds society together through mutual obligation. Without debt, we return to medieval economics. Only the already wealthy prosper. Innovation stops. Quality of life plummets. Social trust collapses. The paradox. The people who would benefit most from debt cancellation initially, the poor and indebted, would suffer most in the long run, because credit is what allows upward mobility. The real lesson? This thought experiment doesn't prove that our current debt system is perfect. It's deeply flawed. Inequality is real. Predatory lending is real. Debt traps are real. But it proves something else. The solution to bad debt isn't no debt. It's better debt. Fairer debt. More sustainable debt. Because debt, fundamentally, is just another word for promise. And without promises about the future, we have no civilization at all. So maybe the question isn't, what if we canceled all debt? Maybe it's, how do we make debt serve humanity instead of enslaving it? That's a harder question, but it's the right one.